Hi guys, after a long time, Inspiration Academy, we are here with a new video. This video is for grade 10 students who are studying business and accounting studies. Our lesson is prime entry books. In this lesson, we will be studying about prime entry books. What are prime entry books? Why we need prime entry books? Source documents. What are source documents? And then what are the source documents related to each prime entry book? And then the uses of prime entry books. But before learning about them, we have to discuss about the accounting process to understand the order of recording transactions, right? First of all, we have to identify and measure the transaction, and then we have to prepare the source documents, and then we are recording in the prime entry books. And from the prime entry books, we are recording them in the ledger account. And ledger accounts are prepared as a trial balance is prepared as a summary of the ledger accounts. And then from the trial balance only, we prepare the financial statements. Example, financial position statement and profit or loss statement. Okay, so first we record in the source documents, and then from the source documents, we take the relevant details and record in the relevant prime entry book. Okay. Next, we will be discussing about prime entry books, the introduction, right? Before transactions are recorded in ledger accounts, they should be recorded in a separate set of books known as the prime entry books. Okay, the prime entry books are also called journals, day books, and subsidiary books. The prime entry books are the books in which business transactions are recorded according to the order in which each transaction occurred, using a generally accepted method before recording them in the ledger accounts. As I told earlier, we record firstly in the source documents, and then from the source documents we take to the prime entry books, and after that only we record into the prime entry books. So imagine on 1st of October, owner invested rupees 50,000, let's say, as additional capital to the business. Okay. So, and then on 2nd of October, right? Let's say a debtor receipt of rupees 45,000 with the discount of 5,000, right? Likewise, oops. here. Likewise, business transactions occur and we have to record them in the order in which they occurred. Okay, that's what should happen. Okay, we should record in the order, sequential order. Imagine on first, if some transaction happened, we can't record it after recording the transactions on second, right? We have to record the transactions in the proper order. Okay, then accordingly, the transactions which are similar in nature and occur recurrently should be recorded in different prime entry books, right? Imagine same kind of transactions should be recorded in same prime entry book and different ones should be recorded in different ones. Okay, here is the summary of the prime entry books, right? So here we look into this, right? Transactions related to receipts and payments of cash are recorded in the cash book, right? So the source document is cash receipt and payment voucher. Okay. Then transactions carried out through bank current account. Remember bank current account, right? That is recorded in the prime entry book we call bank account. Okay. Then the source documents for bank account are deposit slip, right? Which we use when we deposit money, we fill it and give to the bank, right? Also, we get a copy of that also, right? Then bank statement, right? We receive the bank statement and we prepare the bank reconciliation and adjusted account, right? Adjusted cash accounts for that, right? Referring to the bank statement, right? Check return notification, right? That is the notification that you get when a check is returned, right? Then payment voucher. Petty cash transactions are recorded in the petty cash book, right? Then the source document for that is the petty cash payment invoice. Invoice, right? Purchase of trade goods on credit, right? Purchase of trade goods on credit, or as we can say credit purchases, are recorded in the purchases journal. And the source document is purchase invoice. And return outwards and return inwards are new things for you. That is also not given in your book, textbook. But in an activity given after the lesson in your book, this debit note and credit note, which are the source documents of return outwards and return inwards journals, they are asked, right? So that's why I have included the debit note and credit note also for your reference, right? So trade goods, right? Purchase of trade goods are recorded in the purchases journal and purchases returns are recorded in the return outwards journal. Okay. Okay. Sales journal. Sales journal, we record credit sale of trade goods. The prime entry book is the sales journal and the source document is sales invoice. Sales returns what we call return inwards, right? And the prime entry book is return inwards journal. You have to remember the source documents and the prime entry book with the transaction. Better to remember the return journals also. Return inwards journal, the source document is credit note. Other transactions we record in the general journal. Okay, moving forward, we'll see what are the transactions we record in the general journal also. Before that, we'll discuss about the two types of goods in a business, right? The trade goods and non-trade goods. Trade goods we use for the reselling purpose and non-trade goods not for reselling purpose. Imagine a furniture business. The furniture items are the trade goods, and imagine that that business has a computer or a laptop. If they are going to sell that, that is a non-trade good, and they have sold it. So you have to record that in the general journal. Okay, we'll see what are the transactions that we are going to record in the general journal. We are recording credit basis sales and purchases of non-trade goods in the general journal, and also error correction entries and adjustment entries in the general journal. Adjustment entries වලට examples ගත්තොත් bad debts, depreciation, right? They are examples. Error corrections keyword, the omissions and those things are the error corrections. Necessity of prime entry books. So when we are discussing about the necessity of prime entry book, they are necessary due to these reasons. Okay, we'll see those reasons. One is similar types of transactions of a period. Imagine all the transactions of cash receipts for the month of all the cash receipts for the month of October. We can identify, right? Like that. Need to be classified and recorded, right? Then it says the second one, posting transactions to the ledger becomes systematical and convenient, right? Systematical and convenient after we record them in the prime entry books. Okay. Then it's easy to maintain ledger because why? We take only the totals from the prime entry books to the ledger. Imagine the sales journal, we do what? We debit in the purchase journal, we journal the total is debited to purchases account. And in the sales journal credited to total credited to sales account, right? Like that, we take only the total to the ledgers from the prime entry book. So that is convenient when we post in the ledger, and it minimizes the number of entries. If not, your ledger becomes very lengthy and it will be very difficult to see, and it needs a lot of space and all those issues you get. Right? Then minimizes occurrence of accounting errors and easy to find out such errors when we record in the prime entry books. Imagine the bank account and bank statement. If there are differences, we can correct them, right? We can adjust them by referring to the bank account and bank statement, right? Referring to the bank account and bank statement, we can correct them, right? Then we make this adjusted bank account and the bank reconciliation statements to correct those errors, right? Then moving on. Oops. Right. Necessity of, source documents, right? The next we will be discussing about source documents. Source documents are the documents prepared by including all the details of a certain transaction, right? And authorized by a person in charge, right? Each source document prepared by a business is assigned a serial number, right? Imagine 1, 2, 3, right? Like that, it has a serial number, maybe more than 2 or 3 numbers. More than 2 or 3 numbers, right? Then, source documents are used as a basis for recording the transactions in prime entry book. Earlier, beginning of the lesson, we discussed, right? In the beginning of the lesson, we discussed about the process, right? The accounting process. When we discussed the accounting process, we looked on, right here, see the accounting process, right? It is convenient for us, right? Like this. We first do what? Prepare the source documents. Oops. We first prepare the source document, and then from the source documents we record them in the prime entry books. Right, let's move. Yeah, we were here, right? Then here, source documents include the following details, right? These are the details that a normal source document has. This can vary from each source document depending on what is the source document and which type of a source document is that. Okay. Name and address of the business. Then serial number and date on which the transaction had taken place. Then the details of the other party, that mean the debtor or the creditor or the buyer or the supplier, right? Buyer, seller, customer, or the person like that, right? Then description of the transaction, what the transaction is, cash sales, right? Like that. මොනවද කියන එක, right? Then monetary value of the transaction, value එක කොච්චරක්ද? Rupees this much, right? Like that. Then signature of the officer who is responsible for the transaction should be there. It should be authorized, right? Here you can see a source document, invoice or receipt, right? This is given in your textbook, right? Here you can see there's a serial number and then name and address, telephone numbers, date, in which the transaction took place, and then the sum of rupees in words, right? Invoice number should be written here again, right? Rupees in number again. They should be authorized by the signature and then prepared by and checked by, right? This is a typical one. This may vary according to the business. This just check what should be in the source document and try to remember that. Okay, here's another source document. Payment voucher. This is also given in your book. There's no commonly accepted structure, but we can use this one, right? Yeah. Right? It also has a serial number to pay Mr. and Mrs. Calder, right? Check number, right? Like that. Then signature of the preparer, certifying officer, authorize the payment, right? Three different persons venna puluwan, this one, or the same person venna puluwan, right? Source documents use. Okay, when we talk about source documents, right, they can be used as the initial document for a transaction, and we can use it as the written evidence for the transaction. Also, additional information like what is the amount, what are the totals, what are the amounts, what are the quantities, like that. We can get to know about those things when we refer to the source document. And they can be used for recording transactions in the prime entry books. You better remember 2 from the necessities and 2 from the users of source documents. And what are included in the source documents also, you better remember. Right, we'll move on. Right, we discussed this now, and this is the end of this lesson, and now we will be discussing the exercises. Right, in this lesson you have a bit exercises, right? The thing is, you have to know what is asked, right? Just these are the exercises just in your textbook, right? Okay, we'll see the exercises. First one, it says, read and understand each of the following statements related to prime entry books and state whether they are true or false. Right. You have to state whether the given statements are true or false. Okay, let's see the first one. Prime entry books are used to record transactions by classifying them according to their nature and common characteristics. Yes, that is true. Okay, then prime entry books are prepared instead of ledger accounts. No, prime entry books are not prepared instead. The word instead is the problem here we have, right? From the prime entry books, we prepare the ledger accounts, right? That is the thing, right? Okay, so that is false, right? Then, sales journal is used to record the trade goods purchased on credit. Oh, what? Just refer what it says. Sales journal they mention about, right? Then they say about trade goods purchase. How about that? Sales journal and trade goods purchase? No. We don't record trade goods purchased on the sales journal. That is also false, right? Prime entry books are also known as journals or daybooks. That is true, right? Next one. All transactions that had taken place in a business should be recorded first in the prime entry books. No. they should be first recorded in the first recorded in the source documents, and then from the source documents we record in the prime entry books. Right. The transactions are recorded in prime entry books using source documents. Right? That is correct. Then, after recording transactions of a business in prime entry books, they should be posted to ledger accounts. That is true. Firstly, we write down the transactions in the source documents, and then from the source documents we note them in the relevant prime entry books, and then from the relevant prime entry books we take them to the ledger accounts, and then as the summary of ledger accounts we prepare the trial balance. Right. Okay, that is true. A responsible officer should authorize a source document for it to become an acceptable document. Yeah, that is also true. It should be authorized to become an acceptable document. That is also true. Right. Moving on to the second exercise. Items that are generally included in a source document. Right. Items included in a source document. Right. Okay, we'll see. Firstly, there should be a serial number. Right. Imagine 1, 2, 3. Right. Like that. And then the date in which the transaction had taken place should be there. Then the signature of the officer who authorized the transaction should be there. Then the monetary value, rupees, how much? That should be there. Right? Description, what is it? Sale or purchase or debtor receipt or creditor payment or whatever. That should be mentioned. Then details of the other party connected to the transaction. Those details should be there called someone's business, right? Like that. And then, if possible, the address of that also. Right? Then, signature of the officer responsible for the transaction. Right. Moving on to the third activity. Right. This is a bit important activity. Right. Okay, we'll see. Examples for transactions that are recorded in each of the following prime entry book. Right. We'll see. First, we have cash book, right? Cash inflows or cash receipts, right? Cash sales, debtors, incomes, bank loans. Bank loan किवहामा the money we receive from the bank loan, right, is a cash inflow to us, right? Then cash payments, cash purchases, payment to creditors, expenses and owner's drawings, right? Then petty cash book. Petty cash book, we record the petty cash payments, right? Example, stationeries, postal expenses, refreshment expenses, traveling expenses, right? Such things. Then bank account. In the bank account, we here, when we say bank account is the bank current account, right? There are 3 types of accounts in a bank, right? If I type them here, one is saving account, right? And then second one is current account, okay? And then the third one is fixed deposit. We call it account also sometimes, right? Fixed deposit account කියනවා sometimes, right? Okay, these are the bank accounts, right? So in the savings account, that is the normal account which we get a normal interest, right? From the current account only we can carry out check transactions, right? If we need check transactions and payments made by checks, we need to pay by checks, we need to have a current account. Okay, fixed deposits වලට අපිට හම්බෙනවා normally a interest higher than the savings accounts, right? And current accounts, right? Okay, those things are for your knowledge, right? Transactions carried out through bank current account and such as payments made by checks and check deposits, right? Next, purchases journal and sales journal, right? Purchases journal, we record credit purchases of trade goods, and in the sales journal, we record credit sale of trade goods. Next, we have the general journal, right? In the general journal, we can record the transactions that are not recorded in any specified or specific journal, right? Credit sale or purchase of non-trade goods. Error correction entries and adjustment entries also can be recorded, right? Okay, moving on to the next activity. This activity reasoned me to add the return journals to the note, right? And even in past papers, as I can remember, as I have noticed, right? They have asked about the return journals also, right? Okay, we'll match, right? In the following table, column A shows the prime entry books, right? And column B shows the source documents, and you are asked to match, right? Cash book, yeah. Cash book we record receipts, right? Receipts. Okay. Then bank account, what? Deposit, label. Then we have petty cash book. In the petty cash book, we need the source document, petty cash payment, vouchers. Then next one. Purchases journal, we need purchase invoice, right? Then sales journal, we need sales invoice, right? Then general journal, we need the journal voucher, right? See what is remaining, right? You have two remaining, right? Here, debit note and credit note is remaining, right? So, what is debit note and what is credit? Yeah. Where we record the debit note and credit note. Right. So here we have to take the two, we have to write the two journals, right? So first we have return outwards or purchase returns and return inwards or right, return inwards or sales returns, right? These are the two types of return journals we have. Okay, we'll use one color. Match there, right? Okay, we'll match. Right. Now you need to help me, right? Return outwards or purchasers returns now. The journal is return out. Return out debit. Oops, wait. Ready? You have to note this one, right? Return out the debit note. Return out to the source document is debit. Hari. Return in the sales return. Can you return out to the source document is credit note, right? You have to specifically know these two, right? Okay. So we have come to the end of this video, right? Now, right. We have come to the end, and thanks for watching, and like, share and subscribe to our channel for more videos like this.